There was so much anticipation back in Miami just over a year ago about regulation coming and an opening up of global markets, pension plans, sovereign wealth funds coming into crypto, and obviously none of that has occurred. And that is actually why we're in a rut that we are right now. It also remains a huge opportunity. There is 2 points of light that I think people should think about that look interesting right now. There were a lot of bills coming forward, bipartisan bills in the House and the Senate about trying to regulate crypto. Now it's consolidated down to 2 initiatives. They're both bipartisan. One is very important. Since we last talked, there was a collapse in stablecoins. About 100 billion evaporated. The most, because it was decentralized, it wasn't much, it wasn't all in the United States. So the regulator, while being unhappy, it's not a domestic problem. It was based on bankrupt ideas, the idea that an algorithm could somehow stabilize a coin against the US dollar. That's proven to be false.
Shark Tank star Kevin O'Leary, aka Mr. Wonderful, expects the price of Bitcoin to go up when the Stablecoin Transparency Act passes, which he believes could be soon after the November midterm elections. Oleary emphasized that crypto cannot be stopped, stating, "You either join the wave or get lost." As the global crypto market struggles to surpass $1 trillion in cumulative market cap, Shark Tank star Kevin O'Leary believes that potential upcoming stablecoin regulations could be the next thing to fuel the market. In a new interview with Scott Melker, Mr. Wonderful opined that when regulations come, Bitcoin goes up, explaining that if institutions smell policy, then you got a real move up. Mr. Wonderful explained that there is a bill called the Stablecoin Transparency Act that has a chance of getting passed by the U.S. Congress after November 8, when the midterm elections take place. The Shark Tank star explained, "This act is very simple in nature, which is why it may pass. It's being supported by both parties, and the reason that's the case is that it makes effectively a U.S. dollar the default payment system worldwide." He proceeded to describe why the passing of this act will boost the price of Bitcoin. Even though it has nothing to do with Bitcoin, that will be the first regulation passed by U.S. regulators, and I would argue you want to be long Bitcoin going into that outcome, Oleary emphasized. "You're going to see a lot of interest in institutional capital coming into stablecoins," he added. Before we listen to Ms. Wonderful, please smash the like button and subscribe to the channel. Thanks for watching our videos. We appreciate you a lot.
We've had lots of pundits, Jamie Dimon lately calling it decentralized Ponzi schemes. He was speaking specifically to stablecoins, I believe, in that statement. However, at the same time, this bill called the Stablecoin Transparency Act is making its way, it's getting close to markup. And the reason it's interesting is it only does one thing. It only deals with stable coins that are regulated and backed by the US dollar, nothing else. It's not trying to solve for NFTs, doesn't care about Bitcoin. It's basically going through legislation on a bipartisan basis as a payment system. And the reason you should be optimistic for this is why both sides of the aisle support this is it basically overnight, should it get regulated, creates the very first global payment system backed by the US dollar, making the US dollar the default payment system globally. And it will be adopted by every country except North Korea, Russia, and China. Overnight, it will make America even a stronger nation in terms of settling for financial services. So it'll be the very first crypto policy that passes, probably sometime after November 8th. But everybody in here should be optimistic about that because that signals the onslaught of more regulation that will deal with other digital commodities like Bitcoin and everything else. I think one of the great promises of Web3 and why we're all here today is that Web3 should signal the mass adoption of blockchain technology. And all of the dollars that are going into Web3 development are trying to do that, solving for the security of wallets, the ease of use of wallets, transparency of the chain, making it adaptable and easy to use. And the killer app, I would agree with you, would be a downloadable app that would let me store my USDC or whichever stablecoin I choose to use as a payment system and allow me to use that anywhere in the world, in the countries that have adopted it, with a fraction of the friction fees. Imagine a credit card is 350 basis points. ACH transfer fees, SWIFT system transfer fees, all those fees. Now, you wonder why Jamie Dimon is trying to talk this down. I mean, this is threatening his book in a big way. And so just payment systems alone are going to really cause some headaches in banks because they love to transfer assets between themselves and charge you friction. Their gas fees are crazy high. And so this is the disruption and the potential. And I'd argue, to this Voyager story and all of these guys that have gone bankrupt, let me all offer an alternative view. It's a good thing that happened. And it scrapes the patina off the market. It eliminates the idiot management. They'll never get financed again. The ideas that were bankrupt in the first place will never come back. The market remembers losses of 60 billion. And so when you take out the weak managers, the people that didn't understand leverage, the idiot managers, the ones that really were rogue in the sense that they were just doing it for nefarious reasons, you're cleaning the palette. And what's left with is opportunity of stable opportunities like Circle and others that are doing it the right way, and FTX and all these other companies that are raising capital the compliant way. So I'm optimistic that over the next 24 months, should we get some regulation, the spigot of institutional money will come pouring into this space. Many investors see this disruption coming in the next 2 years. So these banks are going to have to figure out how to adapt to this and compete with it. And the best way I'd say is, I believe that the sector will be the 12th sector of the S&P in 10 years. So what's going to happen is financial services is a really big sector of the S&P. Some portion of that value is going to get transferred over to blockchain, the 12th sector, which doesn't exist yet. So you have to decide as an investor, there's two risks in investing in crypto. One risk is you invest in crypto. It's volatile and it goes to zero. Could happen. The other risk is you don't invest in crypto and all that asset value transfers over the next 2 to 3, 4, 5 years into blockchain, which is now providing some portion of financial services. You got risks both ways. I've chosen to invest in crypto and blockchain and many, many projects, including I'm a large shareholder of what Ben is doing here because I can invest in that company and it's regulated. I got no rogue anything. There's no Kim Kardashian SEC charge there. That's not going to happen. This is a regulated business in a market that's very advanced. The Canadian OSC, which is equivalent to the SEC, gave this guy an order that he is now allowed to have 1 million Canadians trading on a broker-dealer crypto platform, and starting the beginning of the next year, fractional shares of equities. So in one account, you can have everything you want. You can have equities, fractional shares, real-time quotes, crypto, 40 different tokens and coins, right?
Yeah.
All regulated by the regulator.
Right, and regulated staking coming out soon, which will be the first in North America.
That's the first ever, yeah.
Kevin of Oleary argues that even though the bill doesn't particularly refer to Bitcoin, the first stablecoin regulations passed by U.S. regulators make for a solid case to be optimistic about Bitcoin. According to Into the Block research, 44% of the coin holders are losing money at current price levels. Meanwhile, only 5% are breaking even with the rest of the holders in profit. Most of the on-chain signals at press time remain bearish for Bitcoin. However, on-chain analyst Plan B believes that Bitcoin has now reset its range, replacing the old low of $4,000 to the crucial level of $20,000. Despite the slump, the analyst remains optimistic and suggests accumulating more coins at the current levels. Do you agree with Shark Tank star Kevin Oleary about Bitcoin and crypto? Let us know in the comments section below. Thanks for watching.